Bitcoin is a belief. Beliefs last longer than ideas. There's no companies in the S&P 500 from 100 BC. Gold's been around since then. Bitcoin will be around for a long, long time. It's a belief at this point, and people can fight it, but it's going to be around. I think you want to start shorting ideas, and you want to be long beliefs.
Visser emphasizes that Bitcoin should not simply be compared to gold, as many analysts have traditionally done. Instead, he suggests viewing Bitcoin through the lens of the digital economy, and even comparing it to the Magnificent Seven stocks: Apple, Microsoft, Google, Amazon, Meta, Tesla, and Nvidia, because of its potential role in modern portfolios.
Bitcoin just for a second, because when I went to my first crypto event, that's when I really saw and understood that young people at all levels of occupation, lawyers, doctors, my kids are most of them are in the ones that are working are in the healthcare field, and they can't live where they live or want to live because they can't afford it. So the way that I've dealt with them is, I mentioned it, strategic Bitcoin reserve. I got to give them something that brings them hope. But I keep basically going through them and trying to get them to live day by day and not spend a lot of time on social media, not to spend a lot of time on this, to go socialize, to go hike. Those sound like very Buddhist answers, but the reality is I don't know the situation other than developing a skill and realizing, and this is the hope part for everyone, this is all deflationary. There's just no way around it. AI is accelerating all of the problems that you mentioned. The difference in the United States is we've been able to print money. So the way that we've handled the problem is to do transfer payments and give people money. And that only works when the deficit doesn't keep growing and the debt doesn't keep growing until it becomes a problem. We can't just keep handing out money. We can't let kids not pay their student loans. We can't do this. So what's going to happen is AI is going to have to bring a lot of positive things down the road, which it will. But we're in that period. And that's the thing I would say to people. You got a 5-year period here that if you want to be a capitalist, you have to go learn AI. If you want to be someone that is going to enjoy life and make it through this point, do not get sucked into getting on AI or on social media and every place you want to get into and think that that's going to solve the problem. Get out with friends, go hike, go get in the air, make it through the 5 years as best you can, because the cost of things is finally going to come down. There will be affordable housing in 5 years. They're going to be made differently. There'll be humanoids. The cost of everything will start to come down, and then you'll be on the other side, and that whole dream that you had of getting through it will be there. So for the next 5 years, learn, breathe, and have a better time enjoying life. It's not going to be found on social media. Anyone about Bitcoin, let's say it was probably 2015, and we were talking about how big this could get. And the only way really to do it as a macro person was to do it related to gold. Like, what percentage of gold should it be, depending on where it fits in the belief system? If you believe it's becoming more of the belief, then great. But from a functionality basis, the answer that I'm always going to give to people on this, Bitcoin was the original cash creation. It was the invention for digital money. So if you start with that and you realize it's about 60% of the crypto market cap. So you're right now crypto market cap somewhere just south of 4 trillion. The digital economy is going to grow exponentially. Now, the digital economy has been growing exponentially for a while. And so the thing that I believe is that Bitcoin shouldn't be viewed relative to gold. It should be viewed relative to the Mag 7. The Mag 7 right now is up near 13 to 15 trillion. It's a big number. The reason it's gotten so big is because people have owned it. It's a massive part of people's portfolios. If everyone goes into there's almost nobody on the planet that doesn't own Nvidia at this point. It's 5% of the S&P 500. It's a major part of all benchmarks. So when you have stocks that are that big and part of the portfolio, we all make decisions in our portfolios based on returns. And what questions the returns is when we're not beating bonds or we're not beating some benchmark. If the Mag 7 stop producing the types of returns they have, and my video last week, I went through that. I think we're at the inflection point. NVIDIA reported last night. I'm going to go through why I think everyone in the Mag 7 should start to be thinking about the reality of what's happening, which is competition from AI is coming. You cannot invest in ideas the way that you have in the past. Ideas are stocks. Bitcoin is a belief. Beliefs last longer than ideas. There's no companies in the S&P 500 from, 100 BC. Gold's been around since then. Bitcoin will be around for a long, long time. It's a belief at this point, and people can fight it, but it's going to be around. I think you want to start shorting ideas and you want to be long beliefs as people move more money into the digital economy, which is just starting now because of the government regulations. Stablecoins growth will represent it. But the other thing that's going to happen, AI agents are going to make intelligent decisions. And those intelligent decisions just start with what has the best Sharpe ratio, what has the most liquidity. Well, if you just do it that way, Bitcoin wins over every asset in the world, 24 hours a day, liquidity all day long.
When he first started analyzing Bitcoin around 2015, the natural comparison was to gold. As a macro investor, the question was always, what percentage of gold's market cap could Bitcoin realistically achieve? But today, Visser argues that this framing is outdated. Bitcoin should not be compared to gold. Instead, it should be compared to the Magnificent Seven tech stocks: Apple, Microsoft, Google, Amazon, Meta, Tesla, and Nvidia. These companies collectively represent upwards of $13 to $15 trillion in market cap. They dominate portfolios, benchmarks like the S&P 500.
Arguably the most famous Brazilian hedge fund investor ever who had a big impact on my career because I was in my 20s. I'd opened an office for Morgan Stanley down in Brazil. And he just taught me a lot of things about how to trade markets. We were on the opposite side. I was the person making markets. He was the person trading. He's kind of like the Stan Druckenmiller of Brazil. And so we were talking yesterday and catching up. We hadn't seen each other in a long time. And I asked him how he was investing in AI. And he basically told me a story. He went, no, you know why my returns have been so good over the long term? I stick with what I know. I'm a macro person. I trade currencies. I trade the S&P. I don't get into technologies because there's a great technology today. There's not a great technology tomorrow. And it just goes. So we're talking. And at the very end, he goes, okay, so what should I leave from this conversation? What's the one point you want to make still? And I said, here's what it's going to be. I think people are underestimating the speed of change that is happening right now and that will happen in the future. That MIT report that came out about 95% of companies, not benefiting from. So I'm talking about this week because the report was BS. But here's a more important part to this conversation. It really highlighted because the report was about incumbents. It was about companies that can't change. They can't get through the bureaucracy in their own businesses to adopt this stuff. It gets stopped at some layer of the organization. You and I have talked about how startups have a huge advantage in this. If the innovation cycle is now sped up to weeks, we're in a video game where your company never hits escape velocity. And in that world, how do you invest? You don't invest, you trade. And this is what I said to him. So the ability of waiting for these long trades, like I'm going to short bonds, rates are going to go up to 5% in the next, unless these things happen fast, you're dead. We're changing so quickly and AI is going to speed everything up. So for the people there, other than time, there's a second element, which is if time speeds up too fast, what seems like 5 years used to be 100 years. And so I didn't answer directly your question because I don't like saying to people a target on Bitcoin. I think as AI speeds up and everything happens, what people are going to realize is that, number one, you're living far longer than you thought you were going to live. Everyone should go read about ChatGPT 4B and the basically the advancement they made from OpenAI on this. It's an amazing thing. It's all about age reversal. It shows where we're going. They talked about it on the Moonshots podcast, which was released yesterday, the final 15 minutes. I highly recommend people spending time on it. You're dealing with changing the ability of thinking in time. Bitcoin has no time. It gets you time. It gets you everything you need. If you invest in a company, you're assuming that you'll have enough time to get in and to get out and make money. I don't think you have that time anymore. And so with your point on time to just bring it all around, I think that's the key element that I learned in Bitcoin is that if you can stay in it for the time, really what you're watching is everyone else fighting to not become a zombie in their investments or their companies or anything. And the easiest way to not be a zombie is to put it in something that's going to be here 5 years from now. It's the only thing I feel safely saying will be here 5 years from now and be higher in price than it is today. The only thing. 5 years, so 2 years, absolutely, because of profit margins. The reason I say I don't know, the societal impact in labor versus capital, the S&P 500 is not a representation of the country. It's not, it's 500 companies. There's a lot more companies in this. Most people do not work for a company in the S&P 500. I worked for one for, almost 11 years, but that's it. Everything else was a private company. You can have a market where every company is private. If all of the winners never go public, then all you're talking about is a shrinking of the public market. And I'm just telling you, that has already happened in the debt markets. It's already happened. Private credit is a big thing. So when I say the S&P 500, people should realize I think tokenization is going to bring a new form of capital structure around. You'll be able to invest in that, and you'll be able to diversify. If companies are going up, they're going down, but you're investing in all of them in some kind of thing, you'll produce the returns that were representative of the economy. But I'm not sure that you can say that U.S. stocks themselves will be up significantly 5 years from now. I think 2 years, yes. As we get further out and as AGI gets closer, I think it gets harder for public companies with regards to private companies. If you look at all stocks outside the US, so the MSCI world X the US in local terms, to strip out the currency side, and you look at it since 2007, it's been more than a lost decade. It's been a lost 18 years. What people don't understand is if they go look at the price of a lot of companies in the S&P 500, Ford, I'm not going to go name them all. You got a bunch of companies which have not performed in the last 17 years either. So there has been a lost decade. The reason it hasn't felt like it is because the Mag 7 have dominated the global situation. So they have been the ones that have produced the returns. That's why everyone owns them. That's why when people fade American exceptionalism, I always say, well, let's go through those companies. A good amount of the people that either run the companies or work at the highest levels are not even Americans. They came over here. They happened to go to school in the US, and then they moved out to Silicon Valley and they became part of something. So it's kind of a melting pot. And that's the thing about it is these are innovations. They dominated the planet. If you go look at all the malls across the country, they've been decimated. We've kind of been in a lost decade for stocks with an S. We've been in an okay decade for 7 stocks, and then the S&P goes up with it. I do think people should just realize that the rest of the world already went through this in a major, major way. I don't think emerging markets can have the same kind of future that we had here because I just don't think, and again, I'll say it over and over, when we talk about the stock market, it's a public investment vehicle. If every company remains private, there is no more S&P 500. There'll be something new. Tokenization will come and allow people to invest in these. But I just think people have to get comfortable with the fact that rather than focus on putting your money in something and you're going to lose over the next 10 years, you'll be forced out. And I think Bitcoin is the diversifier to make sure that you're making money in the next 2 years from stocks plus Bitcoin. But then going forward, I think Bitcoin is going to be your hedge against the things that I think are inevitable from AI. I'm fortunate enough to make money and have the ability of saving money. Having some money in bonds makes sense. If you're younger and you're playing the how do I get a house game and how do I get out of this? If you invest in bonds and you put your money in bonds, the government is basically debasing all of that. Unless you believe we're going to go into a recession at some point and you get this magic trick to go buy stocks after they've fallen because bonds have done so well for you. Everyone who's been waiting for that magical recession thing, it just hasn't worked. The only time it worked was this brief period during COVID. And if you were able to get your money in real quick into bonds before the stock market collapsed and then move it right back out when they were printing money and everybody was locked at home, that's great. So I happen to agree with that. And I think every smart person you've had on the show who I think is calm about this and doesn't have a bias has basically said, I've heard Darius Dale spoke on your problem on this as well. He advocates Bitcoin as part of the diversifier as well. You can't hold bonds the same way. You got to have gold and Bitcoin to replace a lot of that bond, if not all of that bond portfolio. I think people should be thinking that way because I think it is the opposite of the bond market. If you're bearish on bonds, why not just get long Bitcoin? You make more money doing that.
Visser closes by addressing bonds, historically the go-to diversifier in a 60-40 portfolio. In today's environment of money printing, deficits, and inflationary pressures, bonds have lost their reliability. The old flight to safety no longer works. For Visser, the solution is clear. Replace bonds with Bitcoin and gold. Both provide diversification, both hedge against monetary debasement, and both are likely to outperform bonds in the years ahead.